It's been a long ride for investors watching the US government shutdown unfold. But now it looks like an end might finally be in sight. As of November 12th, lawmakers in Washington were reportedly close to reaching a deal to reopen the government after what has become the longest shutdown in history. Stock futures are reacting positively, showing signs of optimism as traders bet on a possible resolution. But behind the scenes, tensions remain high. Both major parties are divided internally. Democrats are facing pressure from within their ranks over how the negotiations played out, while Republicans are still struggling to agree on key policy details that could shape what comes next. In short, the shutdown may be ending soon, but market uncertainty isn't going anywhere just yet. Corrections are part of the game, but for patient investors, those dips often turn into opportunities. That's exactly why in this video on the Wealth Wisdom, we're discussing 3 stocks I am personally adding to my portfolio before the dust settles, and why they may be worth watching for the long term. In this video, we'll look at 3 companies that could continue to perform well even if the market cools off. Before we begin, let me be clear. This video is not financial advice. I'm sharing my personal opinions and what I'm doing in my own portfolio. Always do your own research or consult a licensed financial advisor before making investment decisions. If you find value in this content, please like the video, share it, and subscribe. Your support helps the Wealth Wisdom continue delivering clear, data-driven market insights. Let's start with SoFi Technologies, ticker SoFi. This is an all-digital bank redefining how people manage money. SoFi began as a student loan refinancing company, but has evolved into a full-service digital financial platform with a rapidly growing customer base. It is now a nationally chartered digital bank. Recently, SoFi became the first and only nationally chartered bank in the United States to offer crypto trading to consumers. The platform is built for a new generation that prefers to manage savings, investing, loans, and credit cards all in one place. This gives SoFi a strong first-mover advantage in a highly regulated space. Crypto integration within a federally chartered bank provides a secure and compliant way to trade digital assets. It also attracts younger, tech-savvy users who want simplicity and convenience. SoFi also appointed Vivian Tu, known as your rich BFF, as its first chief of financial empowerment. Her role strengthens SoFi's focus on financial education, transparency, and trust, especially among younger professionals. Additionally, SoFi launched Level 1 options trading, giving users more tools to manage risk within the platform. Financially, SoFi continues to show strong momentum. The company added 95,000 new members in the most recent quarter, bringing total membership to 12.6 million, up 35% year-over-year. Total products increased to 18.6 million, a 36% rise. Adjusted net revenue reached a record $950 million, up 38%. Adjusted EBITDA increased 49% to $277 million. Fee-based revenue rose 50%, showing strong diversification beyond lending. Loan originations hit a record $9.9 billion, up 57% year-over-year. The financial services segment stood out, with revenue growth of 76% and contribution profit up 129%. Management raised its 2025 guidance, signaling confidence in sustained growth. SoFi is not trying to be a traditional bank. It's building a technology-driven financial ecosystem with a long runway ahead. Next is Upstart Holdings, ticker UPST. Upstart operates an AI-powered lending marketplace that helps banks and credit unions make better lending decisions, instead of relying only on FICO scores. Upstart uses alternative data, such as education and employment history. Upstart does not issue loans directly. It connects borrowers with financial institutions and earns fees on approved loans. After slowing during rising interest rates, the business is rebounding as conditions stabilize. Loan originations reached $2.9 billion, up 80% year-over-year. Revenue increased 71% to $277 million. The company returned to profitability, reporting net income of $31.8 million. Adjusted EBITDA surged to $71.2 million, a dramatic improvement from the prior year. Upstart also secured a $1.5 billion forward flow agreement, strengthening liquidity and future growth capacity. Analysts expect profitability to continue improving, with strong long-term growth projections. Upstart's AI-driven model is proving resilient after a difficult macro cycle. Finally, let's look at Dutch Brothers, ticker Bros, one of the fastest-growing coffee chains in the US. Dutch Brothers focuses on speed, convenience, and customer experience. The company ended the quarter with over 1,080 locations and plans aggressive expansion. Revenue grew more than 25% year-over-year to $423.6 million. Same-store sales increased, showing strong customer loyalty. Adjusted EBITDA rose 22%, and net income reached $27.3 million. Growth is driven not only by new store openings, but also by increased transactions at existing locations. With mobile ordering expanding and a clear national growth strategy, Dutch Brothers has significant long-term potential. Sophie Technologies, Upstart Holdings, and Dutch Brothers are three very different companies, all building strong long-term growth stories beyond 2026. Disclaimer: this content is for informational and educational purposes only. Markets are cyclical, and volatility is always present. This is not a recommendation to buy or sell any security. If you found this analysis helpful, support the Wealth Wisdom by liking, sharing, and subscribing for more calm, fact-based stock insights every week. Thanks for watching. See you in the next one.